Hello everyone, K Kim here from the Traders Club. Today's October 30th, 2016, Sunday. Welcome to the market update. Happy Halloween. Tomorrow is the Halloween day. Basically, in today's video, is it going to be a trick or treat going into the market next few weeks before the election on the 8th? And I think it's gonna be a trick going into the election. I think we're gonna continue to see tricks from the market. What I like to call shenanigans. A lot of these traps and a lot of these gap ups, gap downs, volatility. I think will continue until the election, which is the 8th. Next few more weeks, I think we will continue to kind of retest these levels right here. I think 209, 210 vicinity is going to be the important level looking at the big picture. Obviously, we do have a downtrend resistance, looking at more of a minor term perspective here. But keep in mind, though, looking at more of an intermediate to primary term, we have been still cultivating. We are still in this cultivation of an uptrend. Obviously, we need that intermediate term higher low for this to resume back up here. Looking at more of a rising uptrend support, if we do a band of support, we're still holding this level. We're still holding this level of uptrend support. So again, what does that mean? Looking at more of a primary to intermediate term, benefit of the Dow goes to buyers. Doesn't mean it's gonna see a bounce tomorrow. It just means that in somewhere in that vicinity, I think after the election, we should see some kind of. Again, I don't like using terms like should or must because the market is gonna do what it's gonna do. What I mean by that is that there's a good probability that should the price continues lower next couple weeks, we should see some good bounce at a 209, 210-ish level. I think there's a good support there, and there's probably a good chance of a bounce there. However, if this thing currently it's been really trying, bears been working so hard over time to break below this old resistance, new support vicinity at 212-ish level. Even on Friday, they attempted to really break this thing down while buyers came back, kind of bring the price back up here. As you can see, that lower wick, and we do have kind of a long-legged spinning top there. It's a similar candle as we've seen back in September 14th. Though the body should have been a little bit smaller for more of a bullish sentiment. So if we do see a bullish move perhaps on Monday, I think there's a good chance we may retest this support level or the resistance level. I'm not sure if you're going to have to break above that. I think the market is going to continue to trick us until the election. I think the treats will come after the election. I am fairly pretty bullish in the overall market after the election. After the election, mid-November all the way until early part of 2017, I am bullish. But again, you want to watch this level here going into next couple weeks. As long as we hold that vicinity, I think that's the sentiment and the intermediate should be bullish there. If I just throw a little bit of Fibonacci analysis there for you guys, looking at that, this is what I call FRZ, Fibonacci retracement zone, meaning as long as we stay above in that vicinity according to the Fibonacci tool, that's all the way to 207, 206, 66 level. There's a good chance this is intermediate from high low before drawing back up. And how do I know that, or why do I come up with that conclusion? Well, remember in Brexit panic, and I tweeted out that we're still in the a lot of people look at things like, oh my god, this thing broke its support, therefore this thing should plunge. No, a lot of times that's not how it works. And especially when bulls work so hard to establish and cultivate this uptrend, do you think they'll just let the bears come in and completely demolish this thing? And obviously they did that. They let bears do these shenanigans back here, and this was important support. But I think ever since we made new all-time high, let's get that out of our head that there's going to be a crash coming. It doesn't matter what people are saying, what TV people are saying, what some tweeters are saying, technical saying, and obviously nothing is guaranteed, but technically concerned that the crash probably not going to happen. Very low probability that's not going to happen. We already cultivated higher high there. And so there's a good chance it will cultivate another higher low before this thing thriving. I am very bullish after the election until next year, as I've been advocating and emphatically expressing my views over the months and all throughout this year. Looking at Russell, because I'm not just saying that now. You know, more people are bullish now, but just go back to my videos and just know that is there any bearish analysis? Have I ever said that crash is going to happen? How many people said that crash is going to happen here, here, and here? How many people? I mean, you go back to your tweets and go back to blogs, and just research on some of these guys that you follow and see how many people thought that there was going to be a crash coming here. How many people thought that that crash is actually going to, well, it didn't happen here, so after the Brexit, it was going to happen. You see. And I've been pretty much all year long that the bulls are going to coming in. We're going to have a one last fight from the buyers, and that's exactly what they did right on that uptrend support. So looking at a major primary term, we're still in a, stop saying that we're in a bear market. We're still in an uptrend. We have cultivated a higher high. Just understand that. I mean, yeah, there might be pullback. That's a higher high right there. But then we continued on with the higher lows and market continued on. That's what it does. We get a correction. We continue high, creates a new high, pull back a little bit, and then boom. We get a correction. We make new high, pull back a little bit, boom. And that's exactly what I'm looking for here. Russell 2000, though, did see a breakdown. And I tweeted out that Russell does not look stable after breaking this double top. And we have broken below the neckline there. So next level of support, I think, is this level right here, 116.46. We're going to probably feel that gap there. And same analysis can be applied here. You can see FRZ, the worst case scenario, maybe 114-ish level. Any of these levels should find bounce and continue higher. How do I know that? Again, last time this was a Brexit panic right there. We found support exactly at about 109 before making new highs. Let me tell you something about the Russell. And I said this before, I want to say it again. We had this pretty large invert head and shoulder. We have broken below, above this neckline. It looks like we're retesting this neckline. What does that mean? Meaning we saw that correction. This thing is ready to make new all-time high. And I think, some of this vicinity should find some support there. Again, this double top is not strong enough to dismantle everything. When I tweeted out that double top has confirmed, the neckline has broken, what I'm saying was this: it doesn't look stable in the minor term, possibly intermediate term, but doesn't mean that just because we have a double top here, everything is gonna crumble and we'll do nothing. Just get that out of your head that this thing is not going to crash. I think we will probably continue to see volatility until the election. And after the election, and after mid-November, again, I'm saying this again, we're probably going to see a strong bounce until early next year. So Russell looks much more weaker than the other indices. However, the financials, I'll end the video with this. Let me get rid of that. Bank's been actually pretty strong, relative strength versus compared to S&P 500. You can see once we cleared that vicinity, I talked about that. I wrote an article that where the banks are breaking out, and we're kind of retesting kind of an odd level, but this is where the market, the banks that decided they're gonna find some support. Probably that's a Fibonacci retracement zone. And so if I just go something like that, voila, you can see that perfectly we found support right in that vicinity, and we've been moving higher. Isn't that the level that we've been talking about in Spider and the Russell there, the Fibonacci retracement zone, right? That's exactly what happened on the Brexit panic. Pullback as well. You can see if I just bring it down, you can see that this is a level that we percent. That last level, actually banks came down much lower than any other indices at that time, but we moved pretty well ever since then, and then we have cultivated yet another higher low there, and we're just fizzling around that at the highs here. It looks like if we can able to hold some of this uptrend, this minor uptrend support, looks like kind of a bull flag here. If this thing is bullish on Monday, looks like banks is ready to really thrive to the upside. If banks breaks out and makes new highs. Obviously, next level resistance at 20, 30-ish level, and so we probably see some pullback, and we could continue to cultivate higher lows and higher highs. So let's recap everything. We looked at Spider, we looked at Russell, and we looked at the banks. Spider obviously holding this level. Russell, we did see more of a bearish outlook because of the double top confirmation, and we saw banks how it's holding up well, and then we're at the high. So you can see we got a mixed signal here. Banks are looking. We have more strength on the banks, while the the small caps are weak. So we got the small caps want to bring this thing down, while the banks want to bring this thing up. And this is a reason why I think the Spider is still holding this level. I don't think we're gonna see a huge dive, but let's say if the market continues to lower next week, next couple weeks, watch the 210 level, and we talked about the 206 is the last level Fibonacci. I don't see this thing going any lower than probably the lowest it would ever go would be probably 206. But any of these levels, I think it's a level to buy the dip, either 209 or 206, and I'll be watching. Should the price continues lower, I'll be watching closely to buy the dip there around 210, 209. I'm not just saying on the Spider, but I'm just saying some of the watch lists that I have on the individual equities. I'll buy the dips in a good level and waiting for that bounce after the election. And once that we see a bounce after the election, I'll do another video at the time. Then I think there will be a lot of treats for us, a lot of treats for those who've been patient, who understands the market, who understands the uptrend, who respects the trend, who understands the bull market. And I think all the market crash theorists and all those bears and people who are fearful is just going to be watching this market continue to rise in 2017, where this will just continue to, I think after election, this thing could get up to even 240s and 250s, maybe even, towards the end of 2008, 2017 or so. So my outlook is bullish in the intermediate term, is bullish in the primary term. However, currently the sentiment of the market is bearish until the election. Tricks will continue, but the treats are coming for those of you who understand this market after the election. I think that's kind of my thought on it today. Until next market update, have a great night. Enjoy your Halloween day with your family, and I'll talk to you guys next